Honorable Speaker, no country has achieved rapid economic transformation without innovation.
Today's budget reading has unveiled 84.3 trillion Ugandan shillings allocation to various national priorities for the 2026-2027 financial year, 33.6 trillion of which is projected for debt servicing, with the government expecting to avail 44.18 trillion from revenue collections.
Human capital development, infrastructure, security, and the rule of law, as well as domestic revenue mobilization to finance the transformation agenda.
For this to be realized, the government has introduced several new taxes and tax increments on various items like fuel, cement, and sugar, which has sparked mixed reactions among the public. Commodities like sugar, cement, and cement-related items have been targeted with a tax increment per 50 kilogram bag, and such are items which are demanded on a daily basis.
But now, the budget of today is going to affect a lot according to the transport means, because there is no money right now. There is Ebola right now. So everything is stuck. Government should look for a solution how Ugandans should survive. Meaning that if the fuel, they should at least reduce the price of the fuel, because the fuel stands for everything. And if the fuel goes high, you have to expect everything to be high. So in that process, they should go and look for it, even though the budget is out, but there is how they can make it and be easy for the people.
I did in electronics, general electronics, TVs, fridges, but currently they have increased by more than 10%. So that means that a TV which was at 600 is now at 700,000. It affects in that people are broke, so they can't even afford the normal price. There is no way they can afford the higher price. You get it. So generally, the economy, people have no money, and yet prices are increasing.
So this tax of 30% is going to affect us greatly, in a sense that our customers, we will have to increase the prices of the materials, and then our customers will be the last consumers of the materials. So if they find our products the prices are so high, we will have to stay with our products and not sell. So sales will go down.
A 30% environment levy has been introduced on second-hand imported clothes, commonly known as a mivumba, aimed at supporting Uganda's domestic garment industry. Traders and consumers decry the increment while suggesting alternative measures that the government should have implemented.
At least reduce on the tax. If it is 30%, reduce it to 20%, to make sure that everyone is comfortable. We are not bad, or we are not refusing to pay the taxes, but we are asking that if you widen the tax base by reducing the taxes, you will get more taxes than getting a few taxes from a smaller circle.
That previously, many people were bringing products, like 5 people could combine in a single container, and they bring products like in one container. But this time, the removal of groupage means that an individual has to bring a single container, which is very costly. And another effect is about the war in Iran. When the war is in Iran, that means that goods are not coming in time, and they are very scarce. So that means that prices keep on increasing. So that means that in that case, the government should think about subsidizing the taxes, like reducing on the tax, so that at least prices don't increase for the commodities, for the general commodities.
Kumbera nsinga bweri twali badde tusooka ne tugumiikirizaako okulinnyisa ebintu kuba naffe ssente tuzirina, ssente zikyakyankalanyeemu.
When sometimes they are going to read the budget or to tell out Ugandans how things goes on, they let them first go down to the people and see their income. How is their income? How is it entering? Because you are not going to earn 10,000, and someone would like for you to pay maybe like a 13,000, which is not. Unless when you're paying 10,000 or you're getting 10,000, let's be that the taxpayer will be beyond maybe between 5,000 downwards. That's how it's supposed to be.
The government said tax increments were necessary to adjust to inflation and maintain revenue targets. Joseph Chigozigola reporting for UBC.